Good afternoon. Welcome to the TheoTRADE afternoon video. I'm Blake Young, and today is February 6, 2025, and we're going to talk about consumer discretionary in conjunction with employment data and how we're on the cusp of something. I'm not saying which way. I'm saying we're right there at this key level. And let me show you what I'm looking at with the S&P 500 first, and then I will talk to you about some consumer discretionary stocks in conjunction with financial ratios I spoke about today in the live main room of TheoTRADE. So to begin with, the S&P 500, we talked about this before on the gap down, and I want you to note a couple of things that have happened. On the gap down that we saw when we were talking about the big gap down off of the concerns over DeepSeek, when it recovered, I said watch for the S&P 500 because we gapped down and closed up, called an exhaustion gap, that we should fill the gap. And certainly we filled the gap, but you'll notice we did not close through it. We tested it, we tried, we filled the gap, and then we put a lot of selling pressure into that move. We did the same thing. We gapped down, closed up, and it said we should fill the gap, which we did the very next day, and then we did close past it. So this would be an indication that this gap is going back into an uptrend, but this gap has been defended. So the broad market is in this weird place where you could treat this as a great big, call it a funny looking bull flag, where you might go look at this area through here as potentially the flag portion, and this would be the flag pull. And so if we're looking at that as the setup, then I would say that you would be looking for a breakout, a close above these highs or trade above these highs through here. It's a little bit hard to read because of that upper shadow that we had spike through and retest the previous high. But overall, we could call that a bull flag. And if it is a bull flag, we go from 575 to 610. We're talking about a 35-point move in the S&P ETF, the SPY. Now, the point here still is that we're on the cusp. We haven't broke through to create and confirm a bull flag, but we also haven't failed and reversed, and we filled this gap, but didn't break down this one. So from a technical perspective, I think it could go either way. And when I say either way, I'm talking about 35 points, a significant move for the underlying S&P. So I'm on the edge. I could go either way with this. I just need some sort of setup, some sort of confirmation. Clear the highs or reverse below today's low to get us into the next trend that could go 35 points. And it's about a 5% move on the S&P 500. But as I'm watching this, I am looking at the economic data. I've been watching the employment data with JOLTS, ADP's non-farm payroll, the weekly unemployment, and tomorrow's non-farm payroll report. And if we look at that data, it has been very mixed. You can see JOLTS missed, one of the lowest numbers we've had, continuing the downtrend from the peaks in 2020 of number of job openings. So major miss in JOLTS. ADP outperformed by a significant amount. We had an increase in the previous number, so revised higher, and the actual went in higher. So that's a good news. Well, then we have bad news again. So bad news, good news, bad news, as weekly unemployment claims are on the rise. Well, if we have less job openings and weekly unemployment claims going up, that's bad news, but yet we're still hiring people. So if tomorrow's number, non-farm payroll, comes in as good or better than what we saw or expected, like ADP, then we have a very mixed bag, but overall I would say it looks like hiring and growth and expansion. So tomorrow could be the catalyst that would say we're still hiring, we're still pushing employment, things are looking good, and therefore I'm going to bet on the consumer and therefore consumer discretionary. If it misses and closes down, I'm looking for that 35-point move lower in the S&P 500, and I won't be betting on consumer discretionary. I'll be betting against consumer discretionary. But for the stocks that I'm going to bet on, the stocks that I think are going to have the best return, the stocks that have the best return on equity that we talked about earlier today, a good PE ratio, a good PEG ratio, those are the ones I want to look at really quick with you in conjunction to consumer discretionary, assuming that we have an outperformance in non-farm payroll tomorrow. And I have a pretty large list of stocks that meet the qualifications that I'm looking for, but I'm going to start with just a few. And what I want you to keep in mind is, as I'm looking at this, we're talking about economic data, financial data, which is reported once a month or once a quarter. And so I am talking about very long-term trends. Home Depot is one of those stocks. It's rallied, pulled back, and consolidated here, and we do have earnings coming up. but it's consolidating almost dead center in this expansion. I do think this is the setup similar to what we're seeing in the S&P. We're either going to go higher or lower, basically the distance that we did right through here. And that means I'm looking for Home Depot, if we have good reports and good data, that we're seeing a move from 380 to 430 roughly, and we could be looking for a 50-point move higher in Home Depot, which would put us all the way back up into the top of this very long-term channel. Home Depot looks very promising, and they have really good return on equity. In fact, one of the top in all the stock market. As we're looking at that, we're going to go into stocks like Amazon and TJ Maxx. Amazon has earnings tonight or tomorrow, and so this is not necessarily the time I want to trade into it because we could get a lot of volatility into this. We could gap down and return back into an uptrend, and that's kind of what I'm expecting. So if we get a gap down and a positive report from the non-farm payroll, I would like to buy Amazon closer to 230 because I'm looking for this type of a trend to repeat as well. And that type of a trend, pull back on earnings and a recovery to the highs, we're looking at about a move of about $30 here, pull back through here, and it ran about $30 there, 34. Pull back here, and so if we pull back to 230, we could be going to 260 on Amazon. Taking a look at TJ Maxx, TJX. I always want to call TJ Maxx because that's one of the local brands. As we're looking at TJX, already broke free. Don't have their earnings coming up yet. We have earnings coming up end of this month, so we need to pay attention to that coming up at the end of this month. However, we've already pulled back. We've already seen the beginning of this rally. If we do the same thing we saw here, then I'd be looking for a small pullback to about 123 and then a continuation higher, just like we did here, repeating that previous pattern. So 118 to 126, it's about an $8 move. Let it pull back. If we get to 122, we're going to likely a 130 price tag on TJX. Lululemon and Royal Caribbean will be the last two we'll talk about today. And these, again, are stocks that have good return on equity. It's shown that the companies know how to develop their shareholders' equity into a return. We're past the earnings here. Notice the earnings here, we're in December, so we're probably not looking for earnings again until second week of March. So there is time here. The problem I have with Lulu is it's already at the top of the channel, but I can see that it still likes the channel. So if I can pull back or even trade sideways where I can buy it somewhere along this bottom green line, whether it's at 380, 385, 400 over the next couple of weeks, I'm looking for a move that should be 10 to 15% higher in Lulu, depending on where it finds that support level, and assuming that we still see the consumer benefiting from more jobs and continuing to be employed and spend. The last one, again, Royal Caribbean. Royal Caribbean's a tough one for me because I don't generally like the fundamentals that go into cruise lines, but they make a lot of money. And so as we're looking at these moves, Royal Caribbean is one of the top performers and has a really good return on equity here as well. We can already see that we've had huge moves from 140 to 260, phenomenal, almost 100% returns. And we pulled back to 219. Now, do I expect 100% and go to 440? Probably not. But we had this pullback, and we just closed inside yesterday, closed inside the gap, telling me the gap down, close up, was an exhaustion gap that should fill the gap, which it did, and now we've closed past it, saying we're likely back into an uptrend. Measuring this one's a little trickier. I would go back to the previous trend and watch for this channel to repeat. So if I activate that channel, we're going to see that this channel replicated here, high, low, high, breakout, retested support. And so I am looking for Royal to get back up to probably about 283, 285. And again, assuming that we have good jobs data. That could be a move that is only going to give you about 3 to 5%, but it could run like this for a very long period of time. We could see a 6-month rally where we could get 50 to 60% return. But watch for it to trade inside this channel and continue to rise closer to the top of that channel, 280, 290. In fact, you could probably go for that 320, 330 over the next few months. All in all, it comes down to consumer discretionary if job data is good. If the jobs data suffers and the ADP was wrong and non-farm payroll shows a lot less hiring, in fact, could be less hiring and even negative, then I would be leaving the consumer discretionary, and then we'd be changing our story and be looking for consumer staples to bounce off of its gap, fill this gap right through here at 79, and then break through the high to create this V-type reversal that could go for another 5%, getting back up to the previous highs. And then we'll find the underlying stocks inside of consumer staples over the next couple of weeks. But that's what it comes down to for me, is we're watching for non-farm payroll to tell us whether we have econ data that's going to support it. We're watching the S&P 500 to tell us whether we're going to break through this short-term high, or if we're going to reverse out of this back into the downtrend because we've protected that gap at 608. And it does look like that 608 is holding so far, but the sell-off today is on pretty light volume as we finish out the day. That's going to do it for me today. Join me and Brandon tomorrow morning as we talk about non-farm payroll and some of the outcomes that we have there. And otherwise, have a fantastic night. We'll see you again next week.